Don't forget to subscribe to the Retire Young podcast on Apple Podcasts, iHeartRadio, and Spotify. If you're just tuning in, Al was shedding some light on how the successful traders create income utilizing the financial markets. There's other asset classes out there that create more opportunity. You have the stock market, you have the options market, you have futures and Forex. So it's just understanding, taking advantage of these other opportunities that are out there, which brings you more choices. And Al, that kind of goes back into retirement. A lot of people want more choices in their retirement. We have a lot of listeners that are planning to retire, or they have retired and they want to continue the same lifestyle, because that's what it's all about when you retire, is to be able to do the fun things in life. Now, let's talk about these retirement plans and some different strategies that the successful investors are utilizing in their retirement accounts. Now, first off, with the 401k, that's a company-sponsored plan typically. Let's talk about the IRA and why so many people are utilizing their IRAs, making their own decisions in there. Obviously, they're learning how to do it first, but they, making those decisions and taking advantage of other asset classes, especially like the options market.
Yeah, I think two words that really are appropriate here are opportunity and choice. With a 401k or 403b or the typical employer-sponsored retirement plan, there's a limit as to what's available for any individual. And typically they're mutual funds. Yeah, some will allow the use of stocks or maybe exchange-traded funds, but typically very limited, which means that, again, those are one-directional type of assets. The market, the assets have to go up in value for a person to benefit. So what do the pros do? They're not just doing that because they know that there are opportunities in different directions, and that's an issue that is part of our education. We talk about that. You started talking, I think, before about shorting.
Yeah.
When somebody is going to short the market or short an asset, basically what they're doing is selling something that they don't own, borrowing it from a brokerage firm, selling it with the idea or intent of buying it back at a lower price to replace it. And we go into more detail on this in these classes.
Yeah, and it's just opening and closing the position. That's all it is.
Correct.
It's just a matter of direction.
It's just basically doing what you normally would do if you buy something in the opposite direction. Instead of buying it and then selling, you sell it and then buy it. But that can't be used in a retirement plan. So what are the alternative choices then, the other opportunities? One is options. Options can be used in up and down markets. There's an option strategy. That's a call option to use if you think something is going to go up in value. There is a call option an option, a put option that can be used if you feel that the underlying asset is going to go down in value. When someone retires, the most important thing is to keep what you have. Keep what you have worked all your life for, because that is going to be probably the most important thing that will be there for a person in retirement to determine the quality of the life that they live. So let's say that somebody retires and the market goes through a bear market, that can have, whatever happens that first 1 or 2 or 3 years of retirement can have a huge impact on the quality of your retirement. So the point is, you can't let the market take money away from what you have worked so hard for over the years. How do you do that? How do you protect what you have? Well, we talk about that in these classes. One way is to have an insurance policy on your portfolio. We will show you how to do that. How can you protect what you have? Options are one way of doing it. You can use futures to hedge a portfolio also. These are all things that should be part of an education. And a lot of educational sources out there concentrate on only one thing. Well, that may not be appropriate for you, or it may be appropriate for a while and then not appropriate during a different market condition. So we concentrate on all of the different assets, different strategies, so that you have access to an education, knowledge, and skill building on assets that will work in almost any market condition.
Yeah, I know you and we both have taught a lot of those investing classes, and I don't know how many times someone else came out of that investing class and said, I wish I knew I could have protected what I had.
Right.
I wish I knew I would have known 2 years ago when this happened. We've seen a lot of people that happened to a lot in 2008 with that crash. And we're seeing a lot more people come to these investing classes to take advantage of opportunities. And it's not about the market's going to do whatever it wants to do. It doesn't really matter. The successful
It doesn't care what you think.
It doesn't. The successful investors always take part and participate in every direction. So how do I self-direct my own retirement? That's, it's kind of what we're alluding to is, we're seeing a lot of people want to direct what they have in their retirement. But some people are a little hesitant because they feel like they don't have the proper education, the proper skills to do that. Well, of course, they don't right now. That's why these investing classes is that first start.
Sure.
But how can the average investor, move their 401k or even IRA into a self-directed account? Is it as easy as calling their broker?
Yeah, absolutely. It's very easy to do that. And almost any one of the brokerage firms out there now, especially the discount brokerage firms, will allow somebody to set up an IRA that is self-directed. What do you eliminate by doing that? Well, one of the most important things is you eliminate fees.
That's that one F word, 4-letter F word.
It's the F word. Got to be careful about that. But that's a huge impact, or can have a huge negative impact on what you have when you retire and what you will have to take you through retirement years. So that's a huge advantage to be able to eliminate those fees. And the people that are doing this now that feel that they don't have enough knowledge to do it, the truth is you're already managing your own 401k or 403b with that lack of knowledge. So you might as well just look at having a self-directed account where you eliminate the fees, but you have many more choices. First, get the education. We're not saying that anybody should just run out and open an account and just start throwing money at the market.
Yeah, you have to be educated first.
Yeah, and that education should include knowledge. It should include skills. It should also include ongoing support and mentoring, because when you get into the real world and start doing things, there will always be things that happen that maybe you weren't prepared for. Always have access to somebody that can help you with that. And the other thing I mentioned earlier, in addition to knowledge and skills, was controlling emotions. Because the number one thing that will impact negatively your trading and investing are your emotions. So how do you control that? Well, it's very similar to baking a cake. When you bake a cake, you have a recipe that you follow. It's a step-by-step process. Same thing is true in investing and trading. You should use a step-by-step process, something that has been proven to work over time. It has consistently shown to be beneficial because it was put together by people that worked on Wall Street, as I mentioned earlier, that actually facilitated order flow. But it's a step-by-step process. If you just have and this is a big word, discipline. If you have the discipline to follow the rules, the step-by-step set of rules, then that takes as much as possible the emotion out of trading and investing.
No, think about this. If the successful investors are, you mentioned the fees earlier, if they're removing fees, typical fees you're going to see in retirement accounts can be anywhere from 0.25% to 5-6%. That's what they're going to tell you. Well, there's other fees that come along with, especially with mutual funds. So think about this. If the successful investors removes whatever percent of a fee year after year after year, that's why they are, quote unquote, successful. And all these strategies and concepts are available to the public as well. And that's why it's so important to be educated. You mentioned that earlier. And if you're new and you've never done any trading in the past at all, that's a good thing. Learning from the bottom up is what you want to do. And if you have invested in the past and just want to learn different concepts on how the successful are creating better returns and how they're doing that. Al, coming up in the last segment here, I want to talk about how to get started. A lot of investors, or I guess a lot of people listening, don't know where to start. And the first thing you got to have is a plan. What are you looking to do? So you got to have a plan. So coming up next is how people can get started in these financial markets and be more comfortable and confident. We will be right back.